Today, I'm going to say something that is going to sound absolutely outrageous, but if you listen to this video, this could be what saves you millions. If you're there and you live in a gated estate, or if you guys are in a gated estate and have formed a residential association, or if you run any kind of management company that collects money from the members of the community and you use this money to pay the shared bills. This could be collecting money from neighbors to pay items like security, collecting money to pay items like garbage, or collecting that money and paying for something like drainage. The Kenya Revenue Authority could be coming for you. And KRA will come for you, not because you are necessarily doing anything wrong, but because they may look at your bank account or your M-Pesa records and tick everything that is coming in and decide that every shilling that you've received is taxable income. In today's case, that assumption by KRA produced a tax demand of 53 million shillings. I'm going to tell you how that happens, so let's get started. Now, in the quiet Jacaranda Gardens Estate, this is in Nairobi, the homeowners did what every sensible homeowner would do when they live in a shared community. And I'm not talking about those bad communities that never repair roads like the ones in Syokimau. Today, I'm talking about the ones that are just interested to provide services and not embarrass you by not opening the gate for you, making you alight from your vehicle and go open the gate for yourself because you did not contribute the rental, because you did not contribute your amount on a monthly basis. I'm not talking about those bad ones. Now, the guys at Jacaranda created a small company to manage the whole estate. That company had only one job. All they had to do was to collect contributions from the residents, and the residents contributed on a monthly basis. And what the company was supposed to do, they were supposed to take this money and pay for items like security guards. They were to cover gardening for the whole estate. They would pay the garbage collectors. They would pay water bills and every other expense that is incidental to managing a gated estate. And looking at this, the company had nothing to sell. There was no profit that was being made. What the company was, it was simply a middleman between the residents on one hand contributing the money and the service providers on this other hand. Now, this company operated for so many years, and for all those years, everything ran smoothly. But when everything is going well, that's when the divorce comes in. Now, on May 9, 2023, KRA sent the company a letter. Not a nice letter to celebrate Madaraka Day, but KRA wanted to verify the company's business operations, not for 1 year, not for 2 years, but for 4 full years. They wanted to cover 2018 to 2022. Now, the company sat down and told the accountant that they have to make sure that the books are right. The company didn't sleep the whole of May. He buried themselves in files. He brought cans of Red Bull to keep him awake because 4 years, it's not something you do in a day or two. And he did all that and put all the documents that were needed in order. Then, the way you would handle the exam papers to a teacher and then hope the marks come out right, that's what the accountant did. He collected all these documents and then presented them to KRA for KRA to review and give them a clean bill of health. In his head, everything was going to be all right. But he was very wrong. KRA took the papers and started reviewing them. Then, on July 3, 2024, KRA issued their assessment. Now, KRA demanded an additional VAT from the company and also wanted additional corporate tax. So remember, these are two different taxes. There is VAT and there is corporation tax. And the method that KRA used was very simple. And in my own view, it was a very flawed method. KRA looked at the books of account, looked at the bank statement, and then they treated everything that was coming into that bank as taxable income. And when KRA did this, they just took all those amounts, they added them back, and KRA was very good at doing the additions. So they looked at every single deposit, even if the company was moving money from one bank account to another bank account, they looked at that money as income, even though it's company doing its own internal transfers. Even the checks that never cleared, the check was deposited, but it never clears the account. KRA took that one in. They took even the collections that people have paid for maybe the water they have consumed. And these were bills that were on their way to the water company. And KRA treated that as taxable income. And when KRA did that, the total demand came to 53 million shillings. Now, that's 53 million shillings is no easy money. I think that's enough to give each Kenyan a million bob each. But let me confirm. So there are 55 million Kenyans. If you give them a million, I don't know. Anyways, let's continue to the story. Now, when the company was hit with this $53 million, now, when the company was hit with a 53 million income request, now, when the company was hit with that request for 53 million shillings, they were completely stunned. One thing is, they knew they did not know any money. They knew they did not owe any money, and they didn't even have that 53 million to start with. That's why they went back to their books, reviewed everything, and confirmed they were fine. And so, on August 2, 2024, they filed a notice of objection. Now, around this time on August 2024, it's the same time that the president was actively dismissing his entire cabinet and bringing the guys from ODM to the broad-based government. But the same time, the company was fighting. They took everything they had, put them in a file, and they did this from audited financial statements, the one I know that you don't keep. They took their bank statement. They did a printout of all the ledgers that they had for the year. And once they did that, they also went back, took all the contracts with service providers from security, from insurance, from water. They took all those files, put them together. They went back even to the casual employees and told them they need to sign for all the money that they had received. They made copies of every receipt that they had. They made copies of the payroll they had paid to every person. They went back, took all the receipts that they had paid for money, and then presented the same again to KRA. And this, they were hoping KRA will finally see the truth. But there is so much you can do and hope that KRA will see a come to Jesus moment and come back, and apologize to you and kiss the ring. But the company had been watching too many movies. There is no way KRA was coming back to kiss the ring. And that is not a good thing. That's why on September 26, 2024, KRA threw away the full objection. And they went ahead and confirmed the full 53 million shillings demand that they had originally given to KRA. As KRA is KRA, they had their own reasons for confirming this assessment, and they gave the company a few reasons. First, they said the casual wage schedule lacked signatures, like someone telling you, ulilipa mafundi na hawakusign. They also said they could not trace any water bill, and KRA couldn't budge. And when this happened, which you should also do if you're ever in conflict with KRA, the company had no choice. Although they had a choice, they could give up, pay the 53 million, and coil their tail behind their legs and write a check to KRA for 53 million shillings. And this is for just managing their own estate. But they had a second option. The other option was to sit down and fight. So what do you think they did? Unlike you, who fears KRA, they decided to fight because they are sons of Mau Mau. And that is why, on October 2024, they lodged a notice of appeal with the Tax Appeals Tribunal. Now, for you